Welcome back to Making Money Matter, ladies and gentlemen. My name is Kerry Stevenson, and today I have the absolute pleasure of having Brien Lundin on the program. He is the publisher of Gold Newsletter, and he's also the producer of the New Orleans Investor Conference. Now, one of the oldest investor events in the world, globally, brings together amazing speakers from all over the globe. And this year's event, I believe, is the 2nd to the 5th of November. So come on, Aussies, let's get up to New Orleans and attend Brien's conference, because I'm telling you, the brain power over those few days is second to none. So Brien, great to see you. Welcome to Making Money Matter.
Great to be with you, Kerry. I really appreciate the opportunity to reach out across the world to your audience.
Or as we like to say down here, across the ditch. Now, Brien, brief background on who you are. It's the first time on the channel.
Yeah, so I am continuing the legacy. I have been continuing the legacy of a guy named Jim Blanchard, who was instrumental in getting gold legalized in the U.S. It had been illegal to own gold in the U.S. since FDR confiscated it essentially in 1933 through the early 70s. And then when they severed the last link, Richard Nixon did, between the dollar and gold in 1971, Jim knew that that was going to usher in a period of inflation where, the central bankers could spend with no repercussions, essentially, and no restraint. So he started lobbying to get gold legalized for American citizens to own again. And he started something called Gold Newsletter to help him do that. That has been published since then, and I am publishing it, have been publishing it for the last 25 years or so. And we're in our 55th year. Now, he was successful in getting gold legalized in 1974, decided to have a conference to teach investors how to invest in gold. And that became the New Orleans Investment Conference. We're based here in New Orleans and have been based here. And that's been the, I guess, preeminent investment event in the world. It's the longest running investment event in the world. It's featured luminaries like Ayn Rand, who had her last public appearance at our event,
Wow.
Lady Margaret Thatcher, Milton Friedman numerous times, Alan Greenspan numerous times, Barry Goldwater. List goes on and on and on. And I started working for Jim as a junior copywriter in 1985. Then he sold his coin and bullion business, kept the newsletter and the conference, brought me along with him in 1990, and Jim passed away in 1999. By that point, I was a minority shareholder, and I bought the majority remaining interest in the organization from his estate, and have been running it ever since. So it's roughly that Jim was running it for about 25 years, and now I've run it for about 25 years, and just trying to continue that legacy of bringing in our conference, really bringing value on top of value on top of value, content from brilliant thinkers, people who are trying to figure out, extraordinary people who are trying to figure out these extraordinary times we're in. And we get hundreds of people flocking to our event because there's nothing else like it, except perhaps your events, I would think. But far away, we're separated so much by distance, but not so much in content and quality.
Interesting thought process that's come to my mind, Brien, and that is, you said just a moment ago, extraordinary times. And you also said that Jim was instrumental in legalizing gold. Has much changed from when you started? In other words, do people still not get it? Do most people kind of blind to what's going on?
Yeah, they really don't get it. And it's interesting. I was on someone else's podcast yesterday and was talking about this very thing. He had noticed that day on the big financial news channel here, CNBC, that they have these little rotating bugs of what the latest prices are in the market, and Bitcoin would come up 12 times more frequently than gold.
Oh, really?
Why? You're talking about something that's been around for what, 12 years and another that's been around for 4,000 years. Why would one be more mainstream and more prestigious than the other? And I think part of it was that in the 1970s, uh, the powers that be were angry toward the gold bugs because they were right. And then there was a long nuclear winter of the 80s and 90s where, gold price didn't do anything but go sideways or down. And yet the gold bugs were still out there preaching, financial Armageddon and doom and gloom. And they were ridiculed at that time and thought that they're, tinfoil hats and all of that. And then they were right again. And that just really kind of angered the powers that be again. The 2000s made extraordinary returns. And then, another bear market. Uh, but nobody likes it when somebody, at least the mainstream doesn't like it when someone preaching doom and gloom is right when they've been dismissing them for so long. And I think that they still look at the gold bull, the gold bug uh, sector or universe as being on the fringe and
Yeah.
a little bit crazy. But the fact is that nothing we're seeing today is by any means normal. And it's amazing to me that anyone can talk about it in the mainstream financial media like it is normal. We've had, since the 1980s, we've had 4.5 decades of ever easier money, ever lower interest rates, except for the past few years. And in the process, we built debt loads that are completely unmanageable at anything approaching normal interest rates. So we have to have low interest rates going forward forever. And that's an environment that is very bullish for commodities in general, real estate, but especially the monetary metals, gold and silver. And we're seeing that happen right now as we speak. So it's we are right again, and the mainstream doesn't like it. But that's really helpful because when they come on board, then we're going to finally see the kind of reaction that we've been expecting and hoping for in the equities, where we really leverage that move. And I'm starting to see signs now that that's happening.
Why do you think that the majority of people look at gold, as Warren Buffett calls it, barbarous relic? Why is it that people don't see gold as money? Because there's no counterparty risk. You don't have governments continuing to print the funny, as I call it, the funny money. What is it about precious metals that people don't accept?
Well, it's hard to imagine that this piece of metal, represents value. I mean, what can you use gold for outside
Yeah.
of jewelry? But it is precisely the fact that gold is durable. It's got all these other incredible physical properties, but other than that, it's fairly useless. Um, that really makes it the perfect money, and money is a proxy for work. And the real advantage of gold is that it's rare and that it's not within the control necessarily of governments that can create currency at will. And that's why people don't, argue against it and its usage, because it takes control out of the powers that be and gives that control, that independence to the holders of gold. So there's a natural antagonism between the establishment,
Yeah.
because they're the ones that went to university. They're the ones that got the degrees that taught them how to what's the best thing for the rest of the masses. And gold argues against that. Gold fights against that. It gives people independence from those machinations of the elite. And so it's been labeled as that kind of a fringe element forever, or at least for the last, since the real emergence of fiat currencies and since the 1930s.
What's your view on fiat currencies at the moment? Because I see it all around the world. For here in Australia, for example, we're coming up to an election. So what do the governments do? They say, well, here's some for you. So here's more paper for you, more paper. Oh, we're going to make you feel better because we'll give you, everyone gets $300. No, it's kind of like an Oprah Winfrey moment where they're just handing out the paper left, right, and center, creating more, devaluing it. Can't they just continue to do that, increase the debt, never mind the consequences, certainly for our lifetime, but how long can they kick the can down the road? Because that's what props them up at the moment.
Yeah, I don't think they can kick the can much further down the road. And two things. One is at least here in the U.S., a lot of people look at it as a dollar issue. They're very parochial in that way and saying the dollar is going to crash, et cetera. And I don't think it is a dollar issue. I think it's a fiat currency in general issue. Just about every developed nation in the world, and the developing ones as well, are in the same situation where they've created debts that are at the point where they're out of control at normal interest rates. But it's also not a situation that's new or unique to us. It's the same story throughout human history. There was the same story in ancient Greece. There was the same story in ancient Rome, where the currency at that time, either gold or silver base, was still debased by government, because governments overspent, either because of lavish royal accoutrements or military campaigns. Even entitlement spending in Rome was out of control. And so they gave the populace bread and circuses to distract them, but they depreciated the currency because of those debts. So we're just repeating the same cycle that is based in human nature. And until humans change, which I don't think is going to happen anytime soon, we're going to keep repeating these cycles. And right now we're mired in one of those cycles. And as I said, I think we're in the end game of the cycle. I think gold at $3,000 an ounce in US dollar terms is telling us something about the future. Now, a big part of that is the fact that central banks are buying it hand over fist without regard to the price. That is what started this bull market and still to some degree sustains it. But they are buying it as insurance against the dollar weaponization that they see out there. There's still, I believe, a lot of other buying around the world of gold as insurance, not as an investment, but as insurance against the repercussions of the kinds of spendthrift policies that aren't just in the US, but you're seeing in Australia and we're all seeing around the world. Just create more dollars, hand them out, and that'll be fine. We are going to feel the repercussions. And it's all part and parcel of avoiding the accountability that gold and silver demand when they're part of the monetary system.
Yeah, it is about accountability. And I often get people saying to me, I just had someone text me this morning saying, oh, I'm thinking of buying some gold, but is it too expensive? What do you say to people that turn around and say, oh, it's way too expensive. I'm not, I don't see it going up any further. And I have an answer to that. I'd be very curious to hear what your thoughts are.
Yeah, I tell them they have to examine why they want to buy gold. And there's really two reasons to buy gold. One is as insurance, as I mentioned. The other is as investment. If you're buying as an investment, you're trying to leverage the move. And in that case, if you look at the mining equities, they have not really responded as they have in the past for a number of reasons. Central banks don't buy mining stocks, for example, but they're starting to. So they're still dramatically undervalued. And if you're looking for an investment in the metals, you have not missed the move by any means in that sector. But if you're buying it for insurance, and I tell people who are new to the sector, they need to start there, because by buying gold and or silver now, you're locking in the current purchasing power of those funds that you dedicate. If you just leave it in cash, with high confidence that in 3, 5, 10 years down the road, those dollars that you're keeping are going to be worth much less. They're going to purchase much less. If you take that money now, put it in gold and silver, you're locking in the current exchange rate, as it were. You're locking in the current purchasing power, and you're protecting that amount of your wealth from further degradation from the depreciation of that purchasing power. So whatever you put in now is insurance against something, not that you think might happen, as with typical insurance, but you're insuring against something you know will happen.
Right.
And you only have to pay that premium once to do that. So the beauty of the metals is that they will protect purchasing power over long sweeps of history. If you buy it today at $3,000 and gold corrects in U.S. terms, and it corrects to 28, in a month, well, you temporarily lost, but in 5 years, you're going to be way ahead of the game.
Do you think that as I sit here talking to you at the end of March of 2025, that devaluation is more on steroids? I think what I'm getting at is, are we at the start of a gold bull market? Because we've been going sideways for a long time. No one cares. Is there a change coming? And is that devaluation speeding up?
Yeah, I think it is. You can look at the CPI measurements in the U.S., and I'm sure other governments are the same. They try to dampen the rate of inflation, the reported rate of inflation, and we know that the real rate is much more than they report. But still, from those official reports in the U.S., for example, inflation in the last report was down a little bit, but still persistently above their 2% target. I think it's very likely we're going to see more inflation because the lesson of the 1970s tells us that it comes in waves, very steep waves, in deep troughs, but steep spikes, and that we probably have another wave coming. I think gold rising over the last year by about 40 some odd percent in U.S. terms is telling us something. I think gold gaining, what is it, about over $200 an ounce over the last 2 months is telling us something. And gold is, and all investment markets are predictive mechanisms. They look into the future and they discount what the likelihood or what is likely to happen in the future. Of all the markets, I think gold and bonds are the most sensitive. And gold rises, and Alan Greenspan preached about this in the 1990s, that gold is an indicator of future inflation. And he was right, because we had no inflation and the gold price wasn't going anywhere. Now the gold price is going somewhere, and it is predicting something ahead. And I think that's very likely a return to easier money by central banks, because they have to. Given the debt loads, they can't afford interest rates at these levels, and some combination of higher inflation rates, which goes hand in hand with easier money. So I think gold's telling us that the current situation is untenable, and it will change, and it virtually has to change toward easier money and higher inflation.
Well, higher inflation is the way you get rid of the debt as well. It would be
right.
Remiss of me not to mention two things, given that you're over there in the US. Obviously, we have a new president in town called Trump, who keeps dropping
If you were going to say that,
Trump bombs, like the gold visa, and I keep hearing him, he drops gold here and gold there, and and all these tariff wars that are starting and are affecting Australia and other countries around the world. I mean, he is really mixing.
Aren't you glad? Aren't you glad you don't share a border with the U.S. right now?
What's that?
Aren't you glad you don't share a border with the U.S. right now?
Yep.
Luxury of distance. Yeah.
Well, luxury of distance, but there's still ramifications out here when he puts tariffs on aluminium and steel and potentially other things that are going on down here. So yeah, there are ramifications coming out here.
Yeah, there's a lot going on right now, and from all different directions. the tariffs are creating uncertainty. They will be inflationary, at least a one step up in inflation wherever they settle and whomever they settle upon. Uh, Uncertainty, that helps gold and silver to some degree. I still think the certainty of currency depreciation is the big motivator always for gold and silver. But that it's not good, and it is inflationary to some degree. There's also another aspect at play, I believe, and that's that the Trump administration has unleashed not just a bull in a China shop, but a herd of bulls in a number of China shops around the world. And, there's nothing that's sacrosanct anymore. He is exposing the JFK files, the Epstein files, talking about auditing U.S. gold reserves in
Yeah.
Fort Knox. All the secrets of the establishments around the world are prone to being exposed in this new environment, and that's part of the story. Another part of the story is gold rising at these levels is making gold shorts nervous, and one of the primary ways that gold has been shorted over the last few decades is through central bank reserves being loaned out to bullion banks, which then sold the gold, bought treasuries as part of a carry trade, and then used the treasuries as collateral for riskier bets in the market. We kind of pioneered the research that exposed that in the late 1990s by a guy publishing the work of a guy named Frank Veneroso. Long story short, no one knows that gold has ever been paid back. And we're seeing tremendous flows of gold from London to the US, from London to Switzerland to be recast in forms that it needs to be in the US, whether for COMEX or for central bank reserves. And I think part of that, obviously tariffs has some part to play in that, but I think part of it is gold trying to get back to where it should have been all along. At risk of being exposed through what the Trump administration is doing. And that's, part of the story. There's turmoil around the world and uncertainty because there's a new player, there's a new sheriff in town, and he's not playing by the establishment rules by any means.
So final word to you, where to from here, Brien?
Well, higher. I've been in this business long enough, Carrie, to be too smart to give a price and a time.
Not necessarily price.
Okay.
Not
Yeah.
necessarily price, but where to. Right at the start of this conversation, you mentioned a bull market. Now, I don't necessarily need a price, but I'm just wondering where to from here in terms of potential turmoil and, not what Trump's going to do next, but do you think people might be starting to wake up? Where to from here?
Yeah. So I think we go higher. There's tremendous buying pressure on gold right now. Largely price insensitive, a lot of it from central banks, and that's the insurance demand. I don't think much of the demand for gold over the past year during this really amazing bull run has been investment demand. I think it's been primarily insurance demand, and central banks are a big part of that. I think the future is going to be volatile. There's a lot of uncertainty. There's some confidence around the world in the fact that we're going to have to return to easier money and higher inflation, and that these debt loads have to be addressed in some way that may necessitate a resetting of the financial system that in some way involves gold. I don't know whether that's going to be in 5 years, 10 years, 15 or 20, but I think that is part of the end game of this cycle, trying to return credibility to fiat currencies by attaching them to something that insures those currencies against, human nature, government mismanagement, places a restraint on this kind of unrestricted money printing. If you look at the history of gold as an investable asset, as not money, but something you can invest in, it's only been since 1970, 71 that it has been anything but money. And over that period, we've had, I count 3 bull markets where gold has gone up 5.6 times from the lows, 7.5 times from the lows, 8.2 times, I believe, from the lows. The low for this cycle is just a little above $1,000. So that would argue that if this is like those bull markets, which I think it is demonstrably is, then we're looking at somewhere $6,000 to $8,000 gold at some point when that cycle completes. If you argue that there's been 2 bull markets, the 2000s and the 1970s, then the upside is, goes into the 20,000s or something like that.
Yeah.
So there's a lot of potential scenarios ahead. I've been in this business a while, like you have, Kerry, and I don't know if you have, but I've developed a fairly healthy cynicism as to, forecasting the future.
Absolutely.
And I don't think anybody can plot in any great detail what's going to happen in the future. But I do think we can have great confidence that whatever lies ahead, we're going to want to own gold and silver and associated investments going into it.
Yeah. Hard assets, ladies and gentlemen, hard assets, not the counterfeit that comes out from around the world. It doesn't matter whether in the US, Australia, or anywhere. How to keep the masses happy is you keep handing out the silly money, the fiat currency, keep them happy. And that's the tipping point. And I see a tipping point coming. But Brien, it's been an absolute pleasure to have you on the program. And I hope we make this a semi-regular moment. And as I said right at the start, Brien has the New Orleans Investment Conference coming up in November of this year after the Australian Gold Conference. So we might try and twist his arm and get him to come down to the Australian Gold Conference, which is 13 to 15 October in Sydney. And that is after the Gold Coast Gold Conference, which is coming up in April. So lots to talk about. It is all about, ladies and gentlemen, you need to protect your purchasing power. You need to protect your hard-earned wealth. We're not saying sell your house and your children. We're just saying make sure you have some exposure to precious metals, because that is going to be important as we move forward into this crazy next part of the cycle. Brien Lundin, thanks so much for joining me on Making Money Matter today.
Thank you, Kerry. I truly appreciate the opportunity.